Hey, it's Michael Saul, also known as Tiny, with the market autopsy video for the week ending Friday, December 7th, 2012. Let's take a look at what's coming up on the economic report front for this coming week. On Monday, nothing really, just some European numbers that are rated oranges here. On Tuesday, though, you got the German economic sentiment. That's a red. Trade balance in the States at 8:30 in the morning. On Wednesday, you got the FOMC statement at 12:30, so it's an FOMC announcement. I didn't check, which is not really that smart of me, I guess, to see if Tuesday starts the FOMC meeting. So let's do it together. FOMC meetings, schedule 2012. I just Google it, see if it's a two-day meeting, and it is. It starts the 11th. Okay, so it is a two-day meeting. So we have the 12:30 announcement on Wednesday, then the economic projections at 2 o'clock, and then the press conference at 2:15. So usually on FOMC days, I'll leave early, but I'm not going to do that. Maybe I'll just take an early lunch from like 11 to 12 or something if it slows down. But usually I like to leave at 10:30 and come back at 2 o'clock, but not with the announcement at 12:30. Then Thursday, core retail sales, PPI, and then retail sales and unemployment claims. So Thursday's a pretty busy pre-market day. Then you got business inventories. On Friday, core CPI, CPI. You got the German flash manufacturing at 3:30 in the morning. So, I mean, starting Tuesday, it tends to get a little bit busy, but the FOMC meeting is obviously where all the focus is going to be. So let's take a look at the market and what we're seeing right now. We came up and banged into this 62% retracement of the last swing down, and right now we are coiling up here. I believe that this coil will be resolved very soon, probably the beginning of the week, but maybe they'll wait until after the FOMC meeting. Now, since we're above all the moving averages, it's real easy to just say, oh, well, by resolved, you mean higher. Yeah, I mean, I'm leaning to the upside here. If I had to take a guess, which thankfully I don't, I would say that we're going higher here. We're above the moving averages. We've crept up and consolidated and then moved higher. And right here, we're working off this overbought condition that the market was in. So to me, it looks like, yeah, we could go higher here. We got to get above this 62% retracement. Then, of course, we have resistance up here at the 78.6, and if we get above that, we would test, it would target, I don't know if we definitely will, but it would target a retest of the highs, if not higher. It usually actually targets the 127.2, which is up here at 150, 170s. So, I mean, first thing we got to do is break here. I know we're above the moving averages, but notice that the short-term moving averages here, the purple and the red, are still below the blue. So it's not like an all systems go here. And the coil brings the market down to an equilibrium point. It could drop out of this. So if I'm leaning to the upside, but as always, I want to see some evidence here. Nice volume pulling in here, at least on the SPY. That's what you want to see as the market digests. And you can see here on the up days, the volume tends to be okay. I mean, on the down days, I guess, too. But overall, it's coming down comparatively, which is what you want to see. That's a little calm before the storm. The diamonds, okay, they're also above their moving averages. This is the Dow. And I'm using the ETFs in case you took a break from me. I can't stand my accent either. I don't blame you. But I'm using the ETFs now instead of the cash indexes, just because I don't know why. Oh, because they trade and they're better to, in my opinion, they're better to use. Sorry, I'm just getting annoyed by this drawing tool. Anyway, it looks like a wedge here. I'm not going to keep fuddling around with it. It looks like a wedge here, and a lot of people think, oh, rising wedge, automatically bearish. No, a wedge is a consolidation pattern. All right, it's a type of coil. So the wedge here, and if you can imagine the line that would be drawn in here, is saying that the Dow is gearing up for a move. So it's confirming basically what the SPY is saying. Here's the NASDAQ. So NASDAQ has a different tone, right? Not above the moving averages. Now, yeah, they're all grouped together, so it's not like they're spread out and below it. But still, got to get above them and got to get above them with a pretty nice shot. So the Dow's lagging a little bit here. And look at the IWM. If anything, the IWM is acting really nice here. And this is, this has to do with window dressing, and this has to do with the January effect, both. Okay, small caps, you can see here how they got really stretched down here, and they're getting a really nice bounce. So that's where the window dressing part comes in for the last quarter. But and the window dressing for the last quarter, the end of the year, it usually happens towards the end of the quarter. But there are other tendencies that happen late in the year, such as the Santa Claus rally, anticipation, and all that stuff. But also the January effect, where small caps tend to outperform large caps. But starting the end of November / beginning of December is when the small caps really come in with that. All right. So, and speaking of January effect, I've gotten a lot of questions on it. I did a free video on it last year. I don't know if I'm going to be putting out a new list this year. I probably will. But I did a video on it. You can check the YouTube channel for it. Don't buy into all the hype from the lying super gurus with their unaudited results. They're nothing like what really happened. If you ask people that actually followed the list, you'll know that they got hit. And I'm not saying that all the stocks lost money or all the option trades lost money. I'm not here to slam other people that do this, but just make sure you understand that when somebody says, oh, it went as high as, you're never getting out at the top unless you're completely lucky. And, a lot of people didn't do anywhere close to the, have anywhere close to the results that these super gurus, scam artists claim. So just be careful with it. It's just a trade, just like anything else. And the real key to it is proper money management. I talk about that in the video, so you can go check that out. Just look for it on my YouTube channel, January Effect. And the tendency is the same. A lot of people call it a trend, but it's a tendency. Okay, so that tendency is still the same year after year, but the list will be different. All right. So anyway, the IWM looks like it's the strongest one, above all the moving averages, coiled up. But of course, we have to see the confirmation and see if it can continue there. All right, let's take a look at some of the indexes. Semiconductors have really been working their way to respectability. Right? I mean, it's still not a strong uptrend here. We're still in more of a base, but it's over the shorter-term moving averages here. I wouldn't mind seeing a little pullback that holds these and then see if they can get up to the 200-day moving average. Here's Clad Tanker in a little coil. Okay, here's one to watch if the semiconductors do decide to go. Here's NVIDIA coiled up. All right, now you would say, well, it's below the moving averages. Yeah, but if the semiconductors bounce, this could be one to definitely watch. Intel, trying to bottom out here. Very good chance of this being on a January effect list, or using this as a January effect stock, because it's a beaten down Dow stock, dogs of the Dow. Okay, looks like it could be a little W here. Talked about this last week. See if it can get to the 50-day. Banks. Yeah, the banks fell out of their little coil, then came up the end of the week. 50-day moving average. Resistance, Bank of America. Breakout above 10. See if it can keep going here. 1120 is potential resistance. What about JP Morgan? Let's make sure I type the symbol right. Also on a nice little breakout. Has to get to the top up here in the 43s though. Citigroup, top up here. See if it can get up there. Get into the 40 area. How about like a Northern Trust? Coiled up. Or a Zion. Yeah, not looking so hot there. All right, so how about the XLF overall? Okay, coiled up, dipped down, but is now breaking. See if that can test these highs. Looking pretty good. Broker-dealer, coiling up below the 200-day. Will they get over that 200-day? I mean, it held really strong back here in September. See if it does this time. Goldman, yep, below the shorter-term moving average, is still above the 200-day. Got to redraw this, although it did break down out of it. Still got to redraw it here to make it look better. See if I can get a. There we go. All right. Let's see if I could do something here. And if it falls down, you got these lows, and then you got the 200-day. Biotechs. Yeah, look at the biotechs. Coiled up here right after getting above the moving averages. So see if this one can rotate up. This group can rotate up, the biotechs. Healthcare may be trying to do something here. Been in a base for a couple of months. See if they can break. Gold, sloppy. That's all I want to say about gold for now. Silver, sloppy. In between the moving averages here. Oil, looks like it wants to take another push down. Would be bullish for equities, in my opinion, if that were to happen. I mean, not a real good bear flag. You see, I'm basically just drawing it in, but you got a possible channel here. Definitely something to watch. See if that can break down and tag those lows. Some glamour stocks. Apple. Wow. A lot of volatility. Big reversal that we got in the room on Thursday, and then Friday, gap up and crap. Amazon. Coiled up here. This guy's ready to move. Or gal. Sorry, no offense. Let's grab a fib here. You can see we're right at the 78.6. So this could either turn tail here. It could either turn tail or go back up to the highs. This is a key decision area. This is what you want to see. Okay? This is a very important. All right? Key decision area here. Very important point for Amazon. One way or the other. All right, Google getting squeezed here by these moving averages. See which way this one wants to go. How about a Baidu? Yeah, Baidu getting cracked open. Okay, see if this can get to 75. Make it a little bit of a bounce for January effect, but right now it's sitting here basically at the lows, multi-year lows. That's why it could be a good January effect type stock. Okay, what else? I wanted to look at Adobe, which we highlighted last week. Okay, so Adobe broke, and now it's just coiling. See if it can continue here. Potash on a retracement. See if it finds resistance at the 50-day. Las Vegas Sands. Yeah, just more choppy than anything. Win. Same thing, chopping around. Rackspace. Could be one to watch. See if this could get some rotation up here. Lulu. Yeah. Let's see if it... Yeah, just more choppy than anything. Wow. This had earnings, I believe. That's why it's all over the place like that. Caterpillar. John Deere. Looking better than Caterpillar. Definitely, right? Over the moving averages. So this is one to watch for potential push. See if this one can get a push higher. Caterpillar low. Under the moving averages, including the 200-day. And finally, Dell. Got some questions on this, and now I know why it went up. By the way, for those who are taking credit as calling this as a January effect trade, I would say they should be ashamed, but they have no shame. This is luck. This was upgraded by Goldman Sachs, which is why it had such a big move. And no, it's not sour grapes on my end, but this is not the January effect trend. This is not. Okay, this happened in the beginning of December, not the late part of December, and it was luck. So, if you want to rely on luck, just remember luck goes both ways. And, they won't take the credit for being lucky here, but if something goes against them, they'll say, oh, it was just bad luck. Right? But this is all luck, nothing else but, just got lucky because it was upgraded, happened to be upgraded. And quite frankly, for all I know, there was some inside information being used there too. I have no idea. I'm not making that accusation, but you never know. Maybe they knew that Goldman was going to upgrade Dell, so they gave it. This is not the January effect, guys. The January effect is a pretty obvious spottable tendency, and this one isn't. So anyway, that's really it. But again, to wrap up, you have the indexes in a coil. You have the Russell acting the best, S&P close second with the Dow. The Dow's in a wedge, but that's still a coil. And the Qs, the NASDAQ, lagging here. So let's see if they step up here and continue to move higher. I'm still not, really banging my fist on the table saying we'll see new highs into the end of the year. I'm getting there, but we really have to do some more upside work here. And, of course, always keep in mind the FOMC meeting this week, and that can move us. And plus we have fiscal cliff talks, and Europe is still in focus. So, it's definitely not the time to get complacent. Trade safe. I will talk to everybody again next week or in the morning emails.